I'm an enrolled agent and I work at Private Tax Solutions.
And I'm John Miller. I'm a certified public accountant with Private Tax Solutions. And today we want to talk about offers in compromise. Offers in compromise are a way for individuals who have tax debts to resolve or settle those tax debts with the IRS for a lower amount. And so we're going to walk through the calculations and how we did this for a couple of clients. And I think the exciting part is talk about what the results are. And at the end of the day, there are a lot of people with tax debts, and so the Offer and Compromise program is one of the ways in which we settle tax debts. So there are two parts to every offer calculation. And part of that depends on the assets. And if a client has high asset value, then that's going to be included in the offer amount. If they show $10,000 in assets, that's how much is going to be in the offer calculation. It's going to be a minimum of $10,000. The second thing we look at is their income and what's left after allowed expenses. And the IRS has standards. Don will talk about that a little bit. Let's just go through some of the assets, and it'll be interesting because you will see how we're actually able to exclude some of the assets. It's kind of fun. In this case, this is an actual example we just settled. The client had a little bit of cash on hand. That's like money in your pocket or your purse. They had some financial accounts like bank accounts, a 401k balance. That was just over $10,000. So that was our first big concern, is how do we exempt off that $10,000? Otherwise, he's going to have to settle his tax debts with those assets. He had two vehicles. Now in this case, well, in all cases, we can take 80% of the value because that's the liquid sale value of selling these cars. And then we can also take off the loan balance. And then there's an exemption amount of $34.50 per car for up to 2 cars. And when you do that, we were able to get all of the car value taken off and exempted from assets. And so at the end of the day, because of some of the work we were able to do to exempt some of the cash, we got the asset value down to $100. And we know that $100 is going to be in the offer. And it ends up being our offer amount, as Don will show. In the income, this taxpayer was actually single. He had a fairly large income for a single individual of $6,289. However, we were able to get the allowed expenditures for living, like housing and food and gas and so forth, to $6,476, which is in excess of the wages. So for income, that part of the calculation ended up actually being zero. Now, there were some problems, and Don's going to talk about our problems in this case in a moment, but we were able to successfully get them an offer in compromise.
That's right. And as John mentioned, the IRS has certain standards for these allowed expenses. Those standards are based on where you live and your household size, and a few other factors. A few problems that we see that happen with this client's case, and it doesn't happen with all cases, but was the bank and the 401k balances. As John mentioned, they had just over $10,000 in 401k and in the bank accounts. We were able to protect those and clear them. They also had distributions from the 401k. They took out those distributions while we were settling the offer and compromise, and we don't like when clients do that before talking to us, because that then becomes a part of the offer and compromise. So I'll talk about that a little bit more. But then the actual housing costs. This client's costs were above the allowed expenses that the IRS had. We were able to pull bank statements, utility statements, and show that these were reasonable costs. And so we were able to take a higher allowed expense for those housing costs. Additionally, this client had state tax obligations. By showing that the state tax was assessed prior to the IRS tax balances being assessed, we can include those as well in these allowed expenses. Another problem that we saw was there was a high out-of-pocket medical cost for this client. We showed through doctor's notes and bank statements that this client needed hearing aids and other supplements, and we were able to include those in the allowed expenses. Finally, this client had a job which required him to travel a lot. That increased his vehicle cost, increased gas and maintenance, and we were able to include that in the allowed expenses as well. In summary, this client's tax debt was just over $46,000. We had an offer amount of $100. That's what we showed previously, the assets of $100. And because there were distributions taken out during the time we were settling this offer, we did have to increase the offer to $604, which is still very reasonable. And we were able to save 98.7% of the tax balance.